Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Da 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 da. Bow chicka bow wow. Hooray! Okay, what happened? Holy crap. We'll have some volume analysis and BlockFi. So let's get right into it. Let's first go to volume analysis. No, actually, let's just go to the charts first. Go to the charts first. Hurry up. Okay. This is the Bitcoin daily chart. This is my fanciest chart of all the charts that I have. It's when I get multiple confluences on a chart, it's definitely time to start looking for reversals. And I was, if you remember, if you guys have been following me on Twitter, you would have seen that when we were on these two candles here, I was kind of ambivalent. I was kind of more on the bull side on this candle, and then I said, well, it's probably looking a little bearish over here. And then this candle, this next day, I was like, well, maybe, we might lift out of this. But I was, by then I was very skeptical whether the bulls were gonna grab it by the horns, and so to speak. And boom, that's what happens. We got this big as Eric Crown's Crypto K would say, the red is the devil's dick. Red girthy dildo right down there, and it's got a nice little spike though here on the end of it. So I wanted to take a look at the volume analysis on this. Now this indicator down here, this is called the normalized volume oscillator. And although it measures tick volume, and this particular broker that I'm using doesn't have a lot of volume going through it as far as money, so it counts ticks as part of its algorithm to generate this particular oscillator. And as you can see, it's very simple to read. The upper levels, this is above average volume over 5 volume bars, and then we have below average volume. So you see on this particular day right here, this indecision, there was a lot of tick volume going on here. Price couldn't make up its mind which way we wanted to do it, and it was after this volume, so we saw a gradual increase over price. So it's not completely dependent upon price. Like I said, it's tick volume, so there was a lot of ticks going on here as people were deciding, a lot of profit taking, a lot of buying frenzy into this particular day right here. This is the daily chart. But if you go here to this bar, there wasn't a lot of tick volume. You can see it's way down here. We're way below it. It's actually, the volume was actually lower than the previous 2 days. And then these were, and this is when CMEs were open. So there wasn't a whole lot of volume, a lot of oomph behind this, even though there was a lot of price movement. And as you can see, we quickly rebounded from the lows of 8,100 up into, we're sitting right now around 87. So, and it's right in line with here. You can see it a little bit better on the 4-hour chart. We're starting to form up some 4-hour demands here. We finally got enough candles to develop a demand zone right here. So this is a good sign. And the previous demand zone was right through here, through this area. So you can see that the wicks were dipping in, the hummingbirds were dipping their beaks into the nectar and then flying away in the right direction. And so the demand here is still strong. It's just that there wasn't a lot of volume because CMEs aren't open. So we're going to have a big gap here come Sunday night, Monday morning, when the CMEs and all the big boys start piling their money in. They're going to look at this after their weekends of golf and polo or whatever it is they do, deep sea fishing and yachting and whatever it is you do when you have a shit ton of money. And they're going to see this as a buying opportunity, I believe, and it's going to be able to take off again. I think what happened was that that news about the miners and the exchanges becoming the main sellers because of the buyers, and that news was all over the internet. I'm not going to rehash it, but I think, yeah, it's kind of spooked a lot of people, and they were like, when they were seeing these down candles here, and the volume was real light, it's weekend volume, and then, it just fell through the, a lot of stops were probably piled up right in here as well. Right in this area, there's probably a lot of stops all the way down to this low wick here. So it just triggered all those stops and then liquidated everybody. So that's what I think happened. So we as you can see, this is our short-term trend line. We go back to the daily. I like the daily trend lines better. Whoops, it's not going to populate. That's not nice of you. There it goes. These are short-term trend lines here. You can see we bounced off of those. Well, let's see. This one, the purple, is actually part of the new trend line. So the green is is slightly more look back. And if you're looking for a good buy opportunity, if you're willing to sit and let money sit on exchange for a while, follow this trend line here. Can anybody guess what this trend line is? This orange one? That is the adoption curve that I've talked about in the past. So that's what that trend line is. It doesn't go in a curve; it's a straight line. But as I said, I was kind of more, I was a little bit more optimistic before this crash here about that trend line maybe occurring somewhere up here, because I thought it'd be more parabolic, but the adoption curve has not been as aggressive as I thought it might be. So I think that this line would probably be a little bit more accurate, and then it coincides. If you really want to get aggressive, here's a double demand zone right here, plus a daily demand zone on top of it. So this area is of around between 44 and 47. That's a good buying opportunity if you're looking for Bitcoin to crash and buy some more. That would be a great place to set up some limit orders. So let's move on to, I'm going to go to Coinbase real quick. Here's the Coinbase volume. You can see that there's a lot more volume going on here, tick volume, as it goes up and down. You see these tick volumes here. What I like to do is hit the aggregation button and max it out, go all the way to $10. So now it slows everything down a little bit, and what we can do is we can look for areas of where support might be. We look for areas where there's a lot of money piled up. Here's 47. It works similar to the profile tool on that you can use. It's that one that hangs out on the side here of the chart and has those rays sticking out of the different volume profiles. It's the kind of thing that these bars is similar to that. And you just look for big areas where here you can see nice round numbers, 8250, 8300. There's a lot. These are more than likely buy orders of people. When you get up here, when you're getting into sell, here's the 61 at 90.50. So that's probably an area of resistance. You don't know exactly whether these are all buy or sell orders. All it is orders that are piled up. So you kind of make educated guesses, and my guess is that would be maybe possibly some sell orders piling up there at 90.50. So if we go back to our crypto chart, 90.50. Let's look at 90.50 here. It's right about here, and it lines up. So that's probably where we're probably going to form up support here, and it already has on the hourly chart. You can see we've we're forming up some support here, some demand area. So that supply area is going to be possibly around 950, right around in here, which coincides pretty well with where this previous resistance was. So just another way to look at analysis. And so that's what I think happened. That's what I think the future is going to hold the rest of the weekend. I mean, I thought we were going to range here. I mean, I'll be the first to admit I was wrong. We crashed through that. I think it was news driven more than anything, and light volume. So I don't think it's the end of the world of Bitcoin by any stretch of the imagination. It's just too much support for it, too much going strong for it, and a lot of, that miner story was all over the place, and I think I just freaked people out. I was listening to it. I've actually pared down my listening to just Crown's Crypto Cave, The Modern Investor, and George Gammon. Those are the three that I listen to religiously every day. And then I'll pick out some minor ones if they, got a headline that I want to just want to check out. Altcoin Daily often tops that particular list as my secondary. But those are my go-to guys as far as, and I want to stress that I don't just copy Eric Crown. I got my own systems and my own style, and but I find we're very similar, and that's why I like listening to him. But I like to, when I do my Twitter shout outs that on my analysis, I like to get it in before he does his, so that he can, so I can show that I'm actually doing this independent, not just copying him, because we often end up with the same analysis. Moving on, interest. Now, I know you guys are probably sick of me hearing me talk about BlockFi, but nobody does what I'm doing. That nobody has the getting paid in the crypto that you want to get paid in your interest account. And I just recently purchased some more Ethereum. I bought low, but not low enough. Apparently, I didn't expect the crash. The crash happened on Ethereum as well, and I got impatient. I actually was down around 199, and I got impatient, brought it up to 205, and then the crash happened, and so I kind of lost out on that a little bit, but I expect it to bounce back fairly quickly. So, but just to reiterate that I am purchasing Ethereum to my next goal is to be have the 32 for staking, and this is the best way to do it. That I went and I studied. There's some great companies out there, Celsius being one, Crypto.com being another, that do offer the same things BlockFi offers and more. But I find if I get too diversified and too scattered, I end up losing money. If I stay focused on one thing, I can do really well. And so that's what I'm doing right now, is to collect my 32 ETH by using BlockFi's earn interest account. And as I said, I just bought some Ether and then I bought it on Coinbase and transferred it over to BlockFi. And unfortunately, BlockFi doesn't have the mechanism that I want to, but transfer directly to them from my fiat account. So I have to go through Coinbase, but they are in the future going to have the ACH account. And that's what I do, is when I go to Coinbase, I use ACH and do it as cheaply as possible. I don't have a Kraken account because I don't have a passport, and so I'm looking at getting a passport, and so I can open up my Kraken account because that's the cheapest way to transfer my fiat to. They go through a separate company, I forget the name of it, to get your money onto Kraken, and I'll probably be staking my Tezos there until I get enough Tezos, which would be the next goal. I don't want to get ahead of myself. So right now we're just focused on the Ether, and I find that this works best for me. You do you. This is not financial advice. Please click like and subscribe if you